Hello and welcome to video number 7 in a series of videos designed to demonstrate how to use the Fractal Suite with the Bloomberg trading platform. In this video we are moving on to another panel, and the panel is number 3, which is located right where my mouse pointer is positioned. And what we're going to display on this panel is the predictor flag. Now the predictor flag is an indicator that's based on a histogram, and it has a value of either 0 or 1. And what that is telling you is that if the price in one of these bars happens to touch or cross the predicted close, the flag goes up to number 1. So let's go ahead and plot that so you can see what it looks like. First, what I'm going to do is plot the predicted close. So we go back to our settings window, plot close predictor, check the box, update. Alright, so we have the predicted close plotted. Now what we are going to do is turn the predictor flag on. So again, let's scroll down to plot predictor flag. Here it is. Check mark the box, update, and sure enough we have a series of flags represented by a histogram of a value of either 0 or 1, as you can see here. So let's zoom in so we can take a closer look at this. Now let's go over again exactly what this is telling us. So we have this predicted close. I have a prediction horizon of 0, so what that means is it's predicting the close of the most immediate bar to the right of the chart. And what the predictor flag is telling us is that the predictor in fact has been touched or has been crossed by price in that bar. So we see here, for example, go ahead and track this, that we have a value on this bar of, let's take a look, a high of 91.70, okay, and our predicted close is at 91.64. So we can see that this had at one point in time either touched or crossed the predicted close. Now this is going to occur real time during this time frame. So if you have a 60-minute bar, for example, like we have here, then as soon as it actually touches the predicted close, then the flag will go up. The reason why this is in past tense, so to speak, is because we're looking at closed bars. So again, we can take a look at some cases where the flag did not go up. We have here, we can see without much difficulty that this bar did not touch the predicted close, so the flag did not go up. The same for here, the same for here. And actually, okay, now this is a little ambiguous, so let's take a look at our legend, and we see that the high price was 92.63, but the predicted close was 92.64. So again, the flag did not go up. Now, the reason why it's important to mark this with the flag is because when you're entering into a trade, for example, let's go back and add the entry channel, which we reviewed in an earlier video. So let's see, plot entry channel. Alright, update. Okay, now let's zoom in so we can see what's going on here. Alright, in a large number of cases, the price is going to, at some point in time, touch or cross that predicted close. Now, the benefit of this is that we don't necessarily have to know exactly what the predicted close value is going to be to benefit from it. And the reason being that if we can see that, say 80+% of the time, we are touching that predicted close at some point during the length of the bar, and we can say, well, statistically, if we're entering a trade and the bar has not touched the predicted close yet, then the odds are in favor for us that we are going to, at some point in time, touch or cross that predicted close. So if we're using that as an exit point, or at least we're moving in that direction, then statistically our chances go up that we're going to have a winning trade. So one way to use this would be if we were to say we have our entry channel here. Let me see if I can zoom in even closer, or better yet, I'll expand it out some. So we'll go 2 standard deviations out. Okay, now let's zoom back in. Alright, so let's say that what we want to do is we're going to go short when price crosses above our sell line, or our sell member of the entry channel. So we see, here's a good example. So we see that the price crosses above the channel. It has not touched the predicted close. Now ideally what we would like to see is that we enter the trade here because the flag did not go up, and then at some point in time in the same bar we end up reaching the predicted close and exit, although the close did end up at the bottom of the bar. But regardless of that, we could enter here and then exit on the next bar at the predicted close, and we still had a substantial profit, at least in this predictor reversion trade. So this is the reason why we plot this, because we can use it as a filter to determine whether or not we have an ideal situation for entering a trade. And that is really the essence of the predictor flag, and that concludes this video. Thank you.